Yo, what's going on, guys? Welcome back to another YouTube video. This is your boy Trillionaire Mac, and I am bringing you guys yet another liquidities concept video. In this video, we're going to be breaking down premium versus discounting versus fair price. I've gotten a lot of questions about this topic since I've mentioned it in some of my previous videos, and I figured I'd just drop a little bit more knowledge on you guys through the YouTube channel to assist you all with your journey of becoming a successful, profitable, and consistent trader. Before we get started, be sure to subscribe to the YouTube channel, hit that bell notification icon to be updated whenever I upload a new video, all right? And leave a thumbs up if you enjoy the content. So, liquidity concepts. Good deal versus great deal. Now, what we must understand is that when price is trending, price is always going to have an impulse leg, a corrective leg, an impulse leg, a corrective leg. All right, and this pattern keeps going until we decide to change momentum from an uptrend to a possible downtrend. Okay, where we're going to also create the same thing, an impulse leg, and then corrective leg, impulse leg, corrective leg, right? That is exactly how we make higher highs and higher lows. So when price is moving to the upside, okay, and you have that impulse leg, your objective is to do what? Your objective is to look to see how the corrective leg plays out, take advantage of the corrective leg, and then catch the swing move to break our previous impulse leg, right? That is essentially what we're doing. Now, one thing that's going to assist you all is going to be using good deal versus great deal, all right? Or before we continue moving forward, I wanted to notify you guys that my institutional trading course is finally complete. You guys have heard it right. Now, I've gotten so many DMs, so many questions, so many Telegram messages about when this course is going to be completed, how much is it going to be, when can you guys get your hands on it. So first link in the description, the liquidity course will be links for you guys. Just head over to my Trillionaire Mac website and you will see the institutional trading course. Now this course is chock full of information, over 5.5 hours worth of information, 31 lessons. What you can expect to learn is how the banks move the market, what concepts to pay attention to in order to track those institutional moves, and most importantly, how to take advantage of those institutional moves themselves. I have everything in here as it relates to imbalance, liquidity, supply and demand, my entry method, which is a 30-minute video. This is probably one of the longer videos because everyone wants to know how the entries are taken, how to get such tight stop losses, things like that. So my entry video is like 29 minutes, some change long. We talk about psychology. We talk about a lot of things within the course that you guys have never heard me discuss. And it's all for you all to learn, absorb, and apply to the charts. So, and I also have a couple of treats in here with the KOT Forex video and a couple of other little treats in there for you guys to take advantage of. This course is going to just change your outlook on the market. All right, if you're a retail trader, it's going to change your perspective from a retail trader's standpoint. If you're a liquidity trader, it's going to change your perspective from liquidity to banks, funds, and institutions, which are the entities that move the market, right? So we're really going to focus on institutional analysis. We're going to really focus on risk management. And with this style of trading, you will become a funded trader. There is no doubt in my mind about it. So feel free to go check it out. I've got a lot of questions and things like that. I told you guys that I was working hard on it for the past 4 weeks. Finally got it done. Finally completed everything. Over 5.5 hours worth of content. And what's most important is there will be updated content. Right? So as you guys continue along, there will be updated content. I do have a couple of testimonials up here of individuals who have taken my other courses. Please, 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 if you guys take this course, please leave a testimonial down here. I would really appreciate it. It doesn't have to be the best testimonial in the world. I just want to know your honest thoughts and your honest opinions on the charts. Was it, or on the course, was it able to help you? Was it not able to help you? Things like that. Let's get back to it. So one thing we must keep in mind is our premium and discount zones. So what is a premium and what is a discount zone? When you see your impulse leg, I want you guys to take your fib and measure your impulse leg. Here are my fib settings. I have 0, 1, and 0.5. Anywhere above your 50%, okay, is going to be your discount or your premium zone, excuse me, premium. Okay, it's going to be expensive pricing. Anywhere below your 50% is going to be your discount, and anywhere around equilibrium or around 50% is going to be your fair value price. So here, so let's just type this out. Understanding what good deals versus great deals will do. Hold on, let me type this out really quickly. Fair value. And I like applying this in conceptual mode. If you are part of the course, you will see that, let's click on the course. If you are a part of the course, you will see that we have theory and application. The application is what's really, really important because it shows you how I actually see the live markets. The application, or the theory, excuse me, not the application, but the theory is simply what we're doing now, where I'm just giving the theory of everything, but I want you guys to take this information and go test it. So some of you guys do tell me, hey, I wish you were, applying this on the actual chart. That is going to be for mentorship students and individuals who purchase the course. If I show anything on YouTube, it's because I want you guys to go apply it to your charts and look at how these things take place and things like that, all right? So this is going to be fair value if it's around 50% or equilibrium. If it's above 50%, this is going to be expensive. And if it's under your 50%, this is going to be your discount. So there are two sections within expensive pricing, and there are two sections within discounted pricing that we can denote. So we can put that there, and we can put this here. Now, when you are in an uptrend, all right, I'm going to ask this question out loud, and I want you guys to answer it. When you are within an uptrend, are you supposed to be looking for buys or sells? I hope you guys said buys. You're absolutely supposed to be looking for buys. I want you guys to use the information that I taught within Order Block Confluence, okay, on how to find an order block, and I want you to add this liquidity concept with that idea. I only want you guys taking advantage of order blocks that are within, for buys, that are within your discounted zones. Okay, whether you have a decisional order block and an extreme, all right? If you guys do want information on how to differentiate which order block you should take advantage of, the decisional or the extreme, feel free to let me know in the comments, and I will drop that video sometime soon. Right, so I want you guys to only look for buy positions when you guys see price come back down from the impulsive leg into your discounted pricing. If it doesn't touch discounted pricing, then I really don't want you all to take advantage of price. I want you guys to just leave it alone, right? Because that improves the probability. Around 50%, around equilibrium is decent because we know that there's fair value, so we know that there will be exchanges taking place at fair value. But to get a high probability trade, I want you guys to focus on your discounted pricing. Now let's start to talk about a good deal versus a great deal. So as you guys can see, we split up these sections into two parts. We have our discounted section overall here, but we have that discounted section split up into high probability and low probability. All right, good deal versus great deal. So above the top 50% of your overall discount zone is going to be considered a good deal, okay? This is going to be an area that, it's decent to take trades from, okay? You will get a very good deal if you do take buy positions above 50% of your order block, all right? And you can be very successful and have a very great strike rate, okay? Now I want to talk about a great deal. So what is a great deal? A great deal is when you take advantage of an order block that is great deal that is greater than 50% of your discounted zone. All right, so anything, once you split this zone up into two pieces, okay, anything to the downside of the equilibrium, anything below the equilibrium of your discounted zone, okay, is going to be a great deal. Now this is why I like to take advantage of extremes, because when you take advantage of extremes, it really decreases the stop loss and increases your target. Now you can still have a very great stop loss here, right? But you still have all of this room. If you have a decisional and an extreme, you still have all of this room that price can play around in. So let's say you take an entry here. Let's say price comes down here and you take an entry and you put your stop loss here. Your invalidation zone of this overall discounted pricing area would be wherever the initial momentum came into the market of this impulse move. So it could be this here pivot demand. It could be, some type of pivot demand inside here, right? It could be something within this leg overall, right? But this here, below this demand zone, okay, below this impulsive move is where your invalidation zone is. So even if price comes down here, stops you out, okay, taps into this order block here, this could still be a valid trade for you to actually take an entry on until price closes below this region here, right? So with that in mind, we want to keep good deal versus great deal at the forefront of our order block selection. And we only want to select order blocks that are going to provide us with the highest probability, lowest risk to our account. We don't want low probability and high risk. We want high probability and low risk, okay? So this here is going to be high probability, higher risk. This here is going to be high probability, low risk. This here is going to be low probability, high risk. This here is going to also be low probability, high risk for buys, okay? Now, let's talk about good deal versus great deals for sells. So if you are pushing up into expensive pricing and you have an impulse leg and it looks like price is coming to the end of, like let's say we're seeing momentum slow down, something indicating that we could get a reversal, okay, after our impulse leg takes place, like a change of momentum up here, okay, breaking structure to the downside, something that notifies us that we could be switching to a counter trend. What you want to do is you could look for possible counter trend trades. So if you are above equilibrium of this overall region, you're going to be in expensive pricing. If you are under the 50% of your overall expensive pricing region, all right, then you're going to look at that as a good deal. Okay, you can definitely take sells within this area, especially if you see an order block form with the order block confluence video that I have for you guys. If you guys see an order block form, within this leg to the downside, we break structure and price comes back to that area, you could look for counter trend sells. It's definitely possible. All right, it's not a bad idea to do something like that. Although I would stick to trading with the trend until you get really good at trading with the trend, then you can start to look for counter trend moves, right? So this is where we would have a good deal for a sell. Now, a great deal for a sell would be anywhere above the 50% equilibrium of our discounted pricing. So anywhere above this region here, all right? So if you see a change of momentum on the M15 time frame up here within this area, like let's say you see something like this, change of momentum, then you can feel free to take a counter trend sell somewhere up here, and this would be a great deal, and you'd be looking for price to push down into a possible great deal buy for us to take advantage of, like this. Okay, so this basically wraps up liquidity concepts of good deals versus great deals, premium versus discounted pricing, or expensive versus discounted pricing, and also marks out fair value. Now, one thing I do want to reiterate to you guys, if you are within an uptrend, I recommend that you all only take advantage of uptrend moves. If you are within a downtrend, I would suggest and recommend that you all only take advantage of downtrend moves. All right, this is going to help improve your strike rate immensely and overall build your confidence as a trader. I'll catch you guys on the next one. Peace out. Be sure to subscribe to the YouTube channel. Be sure to leave a like, hit that bell notification icon, and also go check out the course. All right, let me know what you guys think. Peace.